So welcome back to another episode of Multifamily AP 360, and today's our guest is Mike Taravella. And welcome back for another episode. We did one episode earlier. It's episode 74, Mike. Thank you very much. Thank you for coming back.
Of course, thank you for having me. And I think a couple things have changed since last time we talked. So I'm excited to share our highlights and what happens and help the listeners be better and take over the world in 2026.
Yeah, absolutely. We'll explore that. So, a little bit about Mike. Mike is the founder and principal of Niche Holdings. He has purchased and owned over 200 million, 1,000 units in multifamily assets throughout Tennessee, Kentucky, North Carolina, and Colorado. Mike has created a third party asset management consulting practice that helps clients across the country optimize the portfolio's value. I think he's managing over 1.4K units. Mike Asset managed a portfolio of over 175 million, 1,500 units while helping create systems and operations for their internal property management group. Mike was a licensed CPA in the state of Michigan and helped Dan Gilbert's family office launch and manage several startups from esports to tech. So with that, Mike, you want to add anything to your background or anything else?
No, I think that did it. I think this, since last time we've talked, we scaled our asset management firm and just now working on just sharing our findings and lovely stories with our investors on LinkedIn and just making sure we're as honest and radically transparent to the world, not just our investors, but to everyone. And just if everyone's going to have a hard time in real estate, we're going to tell you what we didn't do and how we're making it better.
Awesome. Thank you very much. And you
Yeah.
emphasize data over intuition in property management. So, what are the most misunderstood metrics that truly drive NOI and occupancy today?
Yeah, I think today the biggest metrics that I've been harping on is leasing. I think a lot of the times your property management company is going to say, spend more money, spend, get on this platform, do this thing, run this campaign. But marketing is one of those areas of business where it's, yes, you have to pour money in, but I think is one of the least held accountable units. So you wouldn't keep pouring money into a employee, a team member, a property that continued to not perform. And similar with marketing, you have to really understand which platforms are working for you, which campaigns are working. So we've had a lot of conversations of 30% of our leads to turn to tours and 30% of our tours turn to applications. And we measure that across platforms, across Google, websites, you name it, because we found that more channels or platforms isn't the answer. It's pouring into one that is working. So our scattered sites in Denver, we found Zillow to be on a heater. We just want to make sure we've gotten in a couple fights on LinkedIn about apartments.com not performing because they're measuring impressions. But at the end of the day, we need to lease units because vacancy is the number one metric that's killing NOI. And I hope other people have been saying it, but a lot of markets are oversupplied. So you have to be competitive. And so if you're not going to win on rents, you have to cut costs. But I think of that more of investing in the most effective tools, not every tool.
Got it. Thank you very much. So, there are a couple of follow-up questions. You're tracking
Mhm.
leads to tour and tour to application conversion rates. So, how should operators isolate execution problems from broader market trends? And also, what kind of platforms, in your experience, giving better results?
Yeah, absolutely. So I think depending on your property management platform, you should definitely have at least the leads. I know in platforms like Buildium, can't speak on Rent Manager, but like the entry level
Yeah.
property management softwares, you may not get that granularity, but there are add-ons that you can do. But even if you have a Zillow or apartments.com, anywhere you're getting leads, you want to see how many people came into your store, how many people are like inquired online, to how many people came in real life, to how many people applied, because it really is focusing on the customer journey. And so the platforms that we've seen work the best, and I'm going to say for our properties that are in Denver, in Tennessee, North Carolina, under 100 units and more scattered site, because I think that also plays into a factor, is Zillow has been our number one driver. We've played a little bit with Google ads and it's been okay, but yet by no means I'm not a master of it. And I think operationally, any investor, owner, operator can walk away with this podcast is that If you put an unlisted YouTube video of your unit in under a minute vertically filmed and send that to all of the leads, we've gotten three or four in our portfolio probably every month just looking at a real video because in the world of AI slop and just like people are touring 10 apartments a day. And so we want to make sure that they can see the unit before they even leave their home. And so that's like operationally one thing that's been super helpful. We've been pushing our managers on it because they don't believe me, or execution risk has been an issue. Yet that has been those two platforms of Zillow and then in the customer journey, sending an unlisted YouTube video has been a game changer to see interest and engagement and whatnot.
Got it. Thank you for sharing that. So just follow up on that one. So many properties lose revenue because prospects don't show up. So what strategies other than you mentioned right now have proven most effective in improving attendance and conversion?
That's a great question because generally we've seen, I think the benchmark that our managers have is like 50% cancel.
Yeah,
We've seen as high as 80% because we've all not want to drive in the snow and the cold and don't want to leave our house. So I think to combat that, there's a tool AI agentless. So it's like the virtual stage or virtual tour or self-guided tours, which admitted that I've been very against since COVID because I think there's some salesmanship with it. However, we've gotten at least three app leases on two properties from just that one tool. And then also just the unlisted YouTube videos and just really focusing on customer service. Because I challenge my resident or my leasing team to let's try to lease this before they even show up. Because if we can show that video of under a minute walking through, we're not having the Taj Mahal level size units, you can walk through it. And it's just a plain video, no noise, no explanation, just here's what it is. And that's done the best. We've also have been bribing people with like little Amazon gift cards or just having looking and lease specials to make sure, hey, if you see this unit, you will get a discount on an application or depending on the property, or rent. Those are the tools. Yet then there's some markets where we're in, like in North Carolina, where we don't have to do any of that, where it's just here it is, take it or leave it. We're priced with our market where we need to be, and we're executing. So it's just every market is so different. So that's why we try to run as many experiments. We've tried to do Murphy beds in our studios, and that didn't work. But this is where the fun part is, where everyone panics, is get creative and have fun and try something that no one's doing, because that's how you stand out.
got it. Thank you very much. So many teams default to price cuts when occupancy slows. So what
Yes, they do.
So what frameworks do you use to push back against superficial rent reductions and protect NOI?
Yeah. So I love this question because every property manager defaults to if the unit is vacant, cut rents. However, that's why we look at our leads to tours to apps, because if we have no leads, that is a function of either we're so priced wrong that no one wants to look at us, or our marketing funnel is broken, can't capture. And that's how you can mitigate that through secret shopping. So that's where we push back. I'm laughing because we've had to teach regional managers how to comp buildings because they've, quite frankly, started their career when rents just went up. They've never been through a recession. So they've defaulted to looking at the lowest rents on Zillow in an oversupplied markets. And so we've had to tell them, hey, this is where we need to be. And we can give tools to salespeople on the leasing side to be like, hey, if we need to close, here's a comp or here's coffees. So we're just really grinding into the fundamentals of, do we have leads? Are they converting to tours? Are they applying? Because at that point, pricing is so easily pushed because that's what the easiest way a manager, like managers are incentivized to get more units, not to optimize your portfolio in the third party model. So that's why we just reground into so many different systems and processes and customer service like we would do in any other business, right? If someone was a jerk at the front counter, you would never come back. And so we just make sure like the customer service is there, the operations are there, and that's why we secret shop a lot of our tool products every week to make sure they fit our standard of response times, yet customer service as well.
Okay. So typically your assets are class B and class C or other asset
I'd say
class?
B, C.
Yeah.
Yeah, I'd say class B. If it's a C, we're pushing it up to B and it's in an area of progress. Like we bought a 12 unit Salisbury, North Carolina
Yeah.
that was defrauded by the owner, or the owner was lied to us. Even people on Twitter were like, "This is a scary area to be in, but good luck." And we took rents from 600 if they were paying to 1100 on in 11 months and turned them all, and it's been a great. Even the police were making fun of our units. Of
Yeah.
this is a scary area, and we've turned the community around because we just believe in safe, clean, affordable housing for our residents, investors, and just making the world a better place.
Nice. Nice. Good word. Yeah. Thank you. And retention versus turnover is a real operational dilemma. So how do you evaluate resident quality and cost trade-off when negotiating renewal?
That's a great question. I think first off, do you want the resident back in your community? Because one bad resident, no matter the size, can create chaos. We had a resident move in and would just, they were mentally ill, as a housing a resident, and they would run around the apartments at 2 a.m. and pour like alcohol under people's doors and leave matches in front. And we quickly got them out. But anytime you deal with a renewal, you have to ask yourself, do I want this resident to be in this community for a year? Meaning, are they abusing managers, which we've seen a lot of? We've had people extort managers, threaten Goop, terrible Google reviews. So you just have to assess of what is the community standard, and don't be afraid of having that short-term vacancy to have more efficiency. And then from there, we know in our markets a lot of the rent increases aren't going to happen. And also, there's probably rent decreases on renewals because rents last year are much higher than this year. So we go in from a tactic of the goal is to get a flat or some increase because we do have some increases, but in oversupplied markets, the renewal strategy is what is the biggest problem we can solve for them? Is it they've been here for 2, 3 years and need a little bit of an upgrade? Is it parking in the local area? Because we're in Denver, so it's a very dense market. So we try to come in it with a problem of is it a one-time concession? And so we start the conversation before we send the renewal of, hey, what is your intention? Do you want to stay here? Do you need a bigger space? Because if you solve problems early, then you're not just like sending like no one wants to get blindsided by a huge bill and the levels of sophistication and news of just where rents are. So I think overall it's just start a conversation with them of what do they want, and then we can solve that problem. And then it's more warranted of what they will likely stay. But it's a conversation piece to get people to stay. I know we have to do fair housing, but we generally start with one price of the consistent. And then from there, it's just a conversation to make sure that it's a win-win for them and us, and more importantly, the community that is super cohesive.
Yeah, great stuff. Yeah, thank you very much for sharing again. So, how has your preparation framework for property manager meetings transformed decision making and accountability across your portfolio?
I would say it's funny because I feel like it's that meme where you're like, all right, simple, super simple. All right, here's every chart and graph, and then it goes back to simple. So we actually built an AI tool that we launched called rentrolai.com because we have 48 properties we have to do every week. And so generally what we do is we focus on delinquency, vacancy, right? Is the unit ready? Is it, and we have a checklist. Is it ready? If it's ready, is it on market? How many leads? How many apps? How many tours? How many apps? The delinquency. Essentially, it's the checklist. Did we send the notice? When? Are they in eviction in the court? Because as we've learned as we scaled, sometimes a lot of managers have like IOUs or payment plans. And so we're just measuring every single week these things so the ball does not get dropped. And I think the only thing difference in select, so we simplified the prep. We also have an analyst that's on the team that kind of helps that prep and just color codes it. So then we're not wasting time. I think the only thing that we do differently now that we haven't done in the past on calls is review comps. We essentially set up before the meeting and even when you buy a building, here are our comps and send them to the manager and ask them if they agree or disagree. Because the last thing I want them to do is make comps every single week and have to research and waste time. So that way we have the comps on it. And then I'd say the only other thing on top of that is if the leads are low, we secret shop the property in the call because then before the end of the week, they can't have an excuse of not responding to leads. So it's more direct prep on the front end of just delinquency, vacancy, and lease expirations. Then it's the comps to make sure our pricing is good. And then if we have to, we'll secret shop live on the call to make sure like leads are getting responded to. And if not, we'll follow up.
Got it, got it. So tech and tools are everywhere. So how should asset managers prioritize which systems are worth investing in to improve property execution?
That's a great. I think it's wherever you're starting off. If you're like a pen and paper person or an Excel person, I think in the last since last time we talked, we've had I went from probably solopreneur to now we have an asset manager in house, an analyst in house to do the help with the asset management. And so I think of it as you have to have a project management tool that makes sense for you. We're Asana people, some people are Monday people, but whatever is the thing that you can replace yourself out of that's super helpful. Then the next phase is investing in SOPs. We use Slab and Loom all the time, especially with Claude and AI. You could just record yourself doing it, and the AI tool will literally write the SOP.
Yeah,
And even with that SOP, to just nerd out even more, we've been using AI to download documents. So literally, I built like a Claude code to, hey, I want you to do the property management prep meeting notes for this property, and it downloads all the documents. And I have no coding experience. So I think it's just in whatever phase of the business you are, and you're like, if you have no systems, get in a sandbox with a project management tool, then invest in SOPs. Then you can play with the AI side of the world of automating, make.com, Zapier's, because you can, every ball that gets dropped will fall on you. And then it's just like a compounding effect. So even if you have one property, build out that system because even if you build it out, it'll evolve and change over time. So I think it's just important to get organized to run fast. And then from there, it's how do you replace yourself? Always think of it, how do I replace myself while keeping the accountability and standards incredibly high? Because your job as an asset manager is not to be liked, not to be, it's to trust and verify because you're a fiduciary to your investors. And your investors have to respect you and your managers have to respect you, or else they're not going to do anything for you and you're just yelling at them. So I think
sure. Sure.
that's
Yeah,
what I would say.
yeah. So would you elaborate a little bit more on SOPs? So which areas you guys are able to implement SOPs?
And all of our property management, so essentially on a weekly basis, we do the same few things. We have a property manager meeting and we have a prep before it. We have the meeting itself, which we have an SOP of like here, especially with the AI tools. Here's the vacancies we need to talk about. Here's the lease expirations. Here's the delinquency. So that's summarized. And then on a Friday basis, we measure the same three numbers of physical occupancy, economic occupancy, and our leasing metrics to make sure did it get better or worse? Because if it got worse, we're following up on that manager meeting going, what happened? How do we fix it? And so we just record ourselves doing those things every week. Because in theory, if you have four manager meetings in a month and review it four times on a weekly basis, the numbers, financially, you should be doing better. And so on a monthly and quarterly basis, we do our financial reviews, which then are loomed. And it is just building criteria. Like you wouldn't buy every building, you're right? You have your investing criteria, you have your financial criteria, you have your occupancy criteria. And so then eventually you just build those systems of what to look for. And as the more experience you get, oh, this crazy. We had to evict someone who faked their death. Never in my career did I experience that before. The property managers will tell you stories you never heard. And then you have to build a system to be like to account for that.
Sure, sure. Thank you. So what are the biggest operational blind spots in property management teams post-pandemic especially, and how can they be corrected with better data?
Ooh, I love that question. I think the biggest thing post pandemic is that the leasing has been a black box that we've been slowly cracking open. And I think a lot of the times is just making sure that you're measuring what is successful there. And I'm harping on that because even we're still like 89% occupied across our whole portfolio. So it's not, oh my God, the world is ending. Yet the biggest thing that I talk about on a daily and weekly basis is hitting those metrics on that funnel. And then just teaching managers like these should be red flags. Because, like I said, marketing is always going to tell you to spend more money. But if it's not working, I would push back and say, what is working? How do we replicate these results? Because, and just regrounding in customer service, I feel like even outside of real estate, like the customer service of the world post pandemic has been like, what do you want? Why are you bothering? So it's just like we're making sure we're like smiling on the phones, treating people well, asking them how they're doing, like very basic stuff to make sure that we're we're still humans at the end of the day, despite what AI thinks and tries to take over the world.
Sure. Yeah. Thank you. At high level, many markets, there are challenges with rent growth and increasing operational expenses like insurance, real estate tax, whatnot, right?
Yeah.
Renovation cost on all this side. So how exactly you guys are overall, how exactly you guys are increasing NOI in this kind of conditions?
Yeah, I think the biggest thing that we've to help our NOI, we've done master lease pol or a master policy for insurance, which has helped a ton, which I've always preached. I never underwrite insurance going down, but that's been super helpful operationally. I think it's I think contesting taxes. I know many markets, not our markets that we're in. I think that's like a huge component that can be super helpful. And I think it's also just like reassessing like contractors and cleaners. I think like ironically, every vendor has to be held accountable to our standard. So like we'd have managers paying weekly cleaning bills and we'd go tour it and it looks gross. So I'm not paying more. We've had property manager accountants double pay utilities and then ask us for money. And we're like, you double paid all of our bills. So ironically, it's like holding everyone accountable. Unfortunately, in recessions, it feels like you have to hold more people accountable because it's not as easy getting 20% rent bumps during COVID and subsequently after. Yet I think it's just like you have to hold everyone accountable to doing their job. And I think any operator, investor, it's just important. Anytime you hear someone say, blame the market, I would ask, how are we circumventing that? How are we mitigating that risk? Yes, rents can go down, yet are we trying new leasing, new marketing? We're not perfect, but our investors know we're throwing everything at the wall. And like I've been following up with C-suite level people at all of our managers to be like, how do we get essentially the question I ask every single day and week is how do we get more tours? Because top of funnel is doing great. It's that middle and bottom of like customer service response times that nitpicking that has been huge. And then, right, making sure everyone's paying bills and processing. So it's just holding everyone accountable to a high standard, which is tough. Yeah, that's the role of an asset manager and a fiduciary.
Yeah, got it. Thank you. So this is from investing point of view. I think you guys last year you guys underwrite more than 160 deals, right?
Yep.
And you closed zero. So how does discipline saying no protect investor capital in today's high rate, high cost environment?
I think it's just knowing what a good deal looks like, right? So, like, we are, and just to give context, our investors are primarily more retail. We're trying to get more family institutional money. But I know as in this environment, our worst case is underwriting 5% cash on cash in the peak. Where we're at today with interest rates higher, I know my investors can't justify a 5% cash on cash when they can get that in a savings account when rents are going down. So the deal in North Carolina we bought in the end of 24, that one the rents were $600 below market and no one was paying. So I think it's just making sure you're keeping the pulse on like LPs. And I think also too, just the bid. The one thing that we measured the most was the bid ask. So what the brokers want and what we're at. So that generally tells me where the market's going. So to start the year, we're at like 40% off to then down to 30%. We were close on a couple deals, but the sellers just didn't want to transact. And then just following up from there. But I think as an LP, the deals that did close were like 1031 cash buyers, which we are not that people yet. And I think too, just our criteria changed in terms of would you rather buy a classy 1960s asset in Texas for a six cap, or would you rather buy that same market 2019 build for a six cap? So the criterias have gotten flip flop because I'd rather buy newer for cheaper than older,
Yeah.
operational heavy flooding, just brain damage.
Yeah.
So I think it's just making sure you're seeing what's in the market, making sure you're looking at market indicators of like oversupply, bad managers, because it's tough to execute. So we just want to make sure that we're buying good deals in good markets with good people.
Yeah. Thank you. Thank you for sharing that. Would you share any of your best asset management or property management experience so far?
The best,
Yeah.
I would say the best property management experience has been, I would say, seeing our property manager in Columbia, Tennessee, going from a property manager to regional. We took over a property. This manager inherited the property from the two. We had to fire and almost sue a manager. And then the manager internally switched. And she just kicked so much butt in getting everything done. All the going from walking, she knows everyone's names, pets' names, they all love her. And to see that growth from just a property manager to regional, I don't have to ask if it's done. And she cares so much, and I don't have to follow up of did this get done. It's more of a function of we're working on strategies. So she's been with us for 3 years. Melissa has been killing it and just learning and growing with us. And then we're just teaching her the strategies that we're doing, and we're preparing for a refi. So it's just been cool to see that growth of like just extreme ownership that we have for ourselves to a manager and take ownership of it. So anytime a property manager grows from APM to regional, I feel like it's just a special experience because it's truly a partnership. And that's why during COVID, when every asset manager would get on a podcast and be like, the asset manager runs the property manager. And so no, this is a partnership. If you hate me, you're not going to do your best work. And she's just been super creative and kicking butt and making my life super easy, despite all of these market things.
Yeah, sure. So would you also share any challenging experience?
Oh, absolutely. Do we have a whole other podcast ready? No, just kidding. So I think the most challenging one, we had a manager's at the time cause $156,000 of damages in 2 months. Very quickly, manager was not completing work orders, so residents were leaving. Manager was charging, contractors were charging me twice as much for a turn because they knew the property manager wasn't going to pay them and they knew I would. Wasn't collecting security deposits. Resident fell and cracked their head open. So we almost ran out of money and so I came in January, turned it around in 2 months, and just took full ownership of the man. It was so bad, I introduced myself as the owner because it was such not our standard. So we turned it around in 2 months, switched managers, going from 72% occupied to 96 in 3 months, and now that property is now with the property manager who's grown with us and scaled with us. We've had managers not walk units for 120 days, and now we've built systems around that to make sure it never happens. I think it just, yeah, a lot of just like lazy management. And I also, I'd put it on me as I didn't verify as well as I should. And so now we've scaled our team to make sure that we have mirrors on those blind spots to make sure it doesn't happen again. And so that's been as a challenge. Yet if the system, we're always constantly building the machine to make sure our lives are easier,
Yeah,
and our investors are making money.
yeah. So now, how often you guys are verifying those kind of blind spots?
I'd say at least weekly. So secret shopping any property that's below 80%, or I'd say below 85% occupied. We're measuring the funnels every week. We're measuring vacancy every week. We're measuring comps every week. It's a lot of work, yet this is why people entrust us with capital. I mean, it gets me fired up when everyone blames the market, but it just means everyone's making excuses, and that's when we have to double down our efforts to make sure that we're executing.
Yeah, makes sense. Looking ahead, which property management innovations like data, incentives, or workflows do you think will most influence performance in the next 12 months, 12 to 18 months?
I feel like it's a cop out, and I'm gonna say AI, but I don't think it's for the reason everyone's like on the leasing side. I think we've entered in our industry, a property manager has way too high of expectations. They have to be accountants, forecasters, budgeters, and do all of these different things. Yet I think with AI, we can have reporting automated, and a property manager should not be pulling reports in Excel's, right? Like we can have AI automate and do that. We can have AI review T12s. So there's just a lot of AI tools that cover the blind spots of, because the property manager at the end of the day should be knowing the residents and solving those problems. The regional should be building the machine around it. So I think operationally, the answer is AI, but it's to do all of the things managers shouldn't be doing and the machine should. Because at the end of the day, it's like numbers on an Excel spreadsheet, I hope. But we've entered a world where managers' expectations are way too high and have to be way too qualified when they should be dealing with the human side. The number side should be doing the red flags. So I think there's a lot of reporting, and I'm pretty biased being a former CPA, but we should be every week should be an automated report of what are the red flags that we have to address, tell the humans how to fix it, and then dive in. So I think operationally looking at flows, funnels, strategy, I'm going to say reporting, yet it just the reporting side is just so weak on management a lot of the times, but that's also the first indicator of what the problem is.
Yeah, yeah, got it. Thank you. So let's shift towards personal side. Any
Mhm.
recent habits that are helping you to be successful?
Yeah, I think Dominic Hart, he has like this journaling technique where he puts like one memorable habit on one. So it's like memorable habits and or memorable moments of every day and then the habits. So measuring that's been super helpful. And then just I think the bigger ones that's been super helpful for me is 5 acknowledgments and 5 gratitudes every day. And then another silly one is the measuring your bank account because a lot of times I know as a systems operations person, I think of like how many things I get done, but really looking at your bank account is a function of am I focusing on the highest and best use of time? And I got that from Sean, who's the new CEO of acquisitions.com. So that's been super helpful of just reminding myself, am I helping the most investors, the highest leverage task? Because in today's world of like scarcity and fear, there's a lot of abundance that can happen. So those kind of things have helped me just be more present, helpful, and focus on the highest leverage tasks.
Absolutely. Thank you very much. Any recent books that impacted your life?
That's a great question. I would say any all the Alex Hormozy books because I am not a sales and marketing person. I know it's Russell Brunson, but it's really helped me because we launched our AI tool and that's just been super helpful. I always say anyone who doesn't know anything about AI, The AI Driven Leader has been a phenomenal book because it creates the framework of how to think of it in not a very technical, boring way. And there's automatic prompts to get you in the game of AI. Because it's changing so much, it's not going to go away. But I think AI is the first tool. As someone who's not a coder, developer, and an accountant, I went from not knowing how to code anything to coding an AI tool when we onboarded our first 5 customers this in the last 30 days. So anything can be made, anything can happen. Seeing people what are doing on X is amazing, but I think AI driven leader gets you in the game of strategy and leadership that you can then trickle that down to your team and your resources.
Awesome. Thank you. That's a great point. Yeah. So how can listeners can connect with you, Mike?
Yeah, so value add Mike is I think all my handles. I've been really just pushing on LinkedIn stuff just because we've just essentially been telling all the stories from our property manager meetings right to LinkedIn. So Mike Taravella on LinkedIn. If anyone has any questions about AI, asset management, life, liberty, the pursuit of happiness, or even stand-up comedy that I've been doing, Mike at valueaddmike.com so we can take over the world.
Awesome. Awesome. And thank you very much, Mike. Really appreciate it.
Of course, Rama. Thank you so much for having me and helping the world be a smarter, better place.
Sure. Absolutely.